introduction, then I
This
would like to
conference
take
will now
introduction
be
of
recorded.
everyone so that I have the idea like from which background and what experience you are. So myself, Visan, I am US tax professional. I am in this field for like more than 5 years. I am working with different firms. I am in teaching for years, and I have taught a number of students as well as professionals. Like I started with the US candidates, like I was teaching to the US professionals who are already working in the different area or the US tax, and they want to like step up. And then I started with the, like different I Indian student as well and Indian professional, and some batches I have taught. So I am in this teaching field due to my passion of teaching and not like as just for money. I like teaching because from the very starting of my career, I am whatever the knowledge I have, I like to share. That's why I am in this field. And currently, I am working independently with the CPA firm as well as one consulting firm, AI consulting firm, and also teaching to you and one another batch. That's about me. So I will I would like to take short introduction of everyone about like your name and what graduation or whatever the academics you have and what work experience you have, if any, and from which city you are. That's it. So Kiran, can you introduce yourself? Hi, Kiran.
Hi Vishan, this is Manisha. Am I audible to you? Hi, hi Vishan.
I think you are not audible to me. Just a minute. Give me a minute.
యుఎస్ గురించి అడిగాను అంత మాటలు ఇన్స్టిట్యూట్
Yeah. So
శనివారం
let's
డెమో
start with
ఉన్నారు మొదటి ఎగ్జామ్
our class.
ఎగ్జామ్ పోయింది కదా
So
బాగుంటుంది
today is the
సిలబస్
first day, so I want to like introduce more about introduce everyone with the
ఏంటారు
US
రాంది
tax
రెండు
and more about how industry is working in the India. Because like after the training, all you want to like work with the CPA firm or the KPO firm. So we will start with the basics of US tax, but before that, I want to let you know about the industry and what work you will going to do and how the process will work. So in the India, US tax is the like one of the most demanding job in the India in the current situation, and I am expecting at least 8 to 10 years are going to the same demand because in the US, like, it's a big economy. There are lots of businesses, and everyone is filing the tax return, because around 65% of individuals are filing tax return as compared to 2 to 3% in India. And also the economy is big, so tax return work and tax compliance work is huge in US. And commerce, we say accounting and tax graduates are very less, and it's not that likely profession in the US. So very less enrollments are there in the accounting and tax profession, and CPAs are not that much growing right now in the numbers. So they need more US tax, US audit professionals, and they don't have in the US because there are 2 to 3 reasons. Main reason is they don't have the head count, means number of the professionals are very less right now. Another is the cost. So if anyone wants to work in the tax, but they are like, if they are in the US, obviously they will expect the US standard salary. So it's a very costly for CPA firm. That's why they are outsourcing to India, or they are opening, big firms are opening their offices in India. Like they are getting one third, good professionals at one third cost. That's why the demand is very increasing. And currently 20 to 25% of the market is tapped, means still 75% of the US tax market haven't came to India, and it's very rapidly growing. That's why this profession is very demanding. And also the KPO firm, like KPO means they will take the outsourcing of the tax work from the US CPA firm, US small CPA firm or medium firm. They will take those US tax work and they will hire professional here, because they are getting in the USD, the salaries are very high in the US tax jobs. So one is the KPO and another is the US CPA firm India office. Like I was working with one of the top 30 US CPA firm. They have the different 3 to 4 offices in the India. So because their cost is very less, they need to pay us in the INR. So salary are still very higher as compared to other professional, and still it is cheaper for them. So that's why salaries are higher and demand is very high. Right now I know, like the firm last I was working, they are giving 50 to 60,000 referral bonus by referring any candidate for their senior role, and 40,000 for their associate roles. So that's the demand of US tax right now. And that's why we are providing the practical US tax training, so that if you are in different experience, like you are not working in the US tax or you are the fresher, you can get the job easily. Right now it is very difficult for fresher to get the job without any even basic knowledge, or the like, if they are CA or something they can get, but without those it is, even to the certified, qualified chartered accountant, they are expecting some basic US tax knowledge. So that's why this is going to very important. So let's start with the basics of US tax. We are going to understand the basics today. I am sharing my screen. Once it is visible, just confirm me. Yeah, I have shared my screen, and just thumbs up it if it's visible. Yeah, thank you. Yeah, so let's start. So you all know what is the tax, but still, like, I want to let you know why tax is there even. Because government needs the money to run the country. Like there are very less taxes in some countries because government has any other resources or the any other way to get the funds. Like Gulf country has the oil reservoir, so they do not need more taxes. So they has very less tax. But to run the country, government needs fund. If they don't have any other way, they will collect the tax. That's the tax. So it's ultimately income of the government. And in the US, there are different types of taxes. Like here in the India, we have the income tax, we have the GST, we have the VAT, everything. Likewise, in the US also, there are different types of taxes. So before that, we need to understand the geopolity or the geography of the US. So there are 50 states in the US, and taxation works at three level. First is the federal, means central, whole the US. It's called a federal in the US. So taxes works at three level. First is the federal, then states. There are 50 states. So if tax is working at the state level, then each state has their own authority to impose tax. Like in the GST, we have each state's GST. And third is the local, or we say is the municipality or county, means local authority. So taxation works at three level. Each tax has like its different level. So first is the sales USE or excise tax. It's on the goods, sale of good. So it is imposed by state and local authorities, not by federal. Then another is the property tax. So in India, we also have the property tax. In the US, there is also property tax. It is imposed based on the value of property. So it will be collected by local authorities. So each authority has their own rules and their own different forms for the property taxes or the way of the collection. Then third is the wealth tax. Wealth tax means tax is imposed only when there is a transfer of wealth or transfer of property. So, for example, whenever someone is giving the property to the next generation in the inheritance, it's called estate. So, whenever there is a transfer of property under estate, there will be the wealth tax need to be paid by transferor, whoever is transferring property. Likewise, gift. If someone is gifting the property to another person, the person who is giving the gift need to pay the tax. It's called wealth tax. Then payroll taxes. Whenever employer pays salary, or we can say the payroll, the employer or employee need to pay some taxes. There are different types of taxes, fika, futa, suta. What those are, we will understand later. Those are the payroll taxes. And very important, which we are going to understand in detail, is the income tax. So income tax is basically tax imposed by government on the income earned by any taxpayer. Taxpayer may be the individual, corporation, business. So whenever taxpayer is earning the income, on that he or it need to pay the tax. So it's called the income tax. And income taxes are like main focus, because the US income tax we are going to work on. So in the US, income tax is at three level. First is the federal. So for whole US, there is one single tax authority. It's called IRS, Internal Revenue Service. So it is collecting federal level taxes and managing all the tax compliance, IRS. Then there is a state. So state level taxes will be imposed by each state. There are 50 states. All the 50 states has their different forms, has their different rules, and some of those states are even exempt. So if someone is residing in the New York, so he needs to file the federal return, means he need to pay to the IRS for the federal level. He also needs to file the return for New York state, and he needs to pay to the New York state. And third level is the local. So not all the local or the local authority or municipality are imposing the taxes, but there are many. So for example, NYC is imposing local tax. So for example, someone is residing in the NYC, working, doing job in the NYC. He needs to file the NYC return. He needs to pay tax to NYC as well. He needs to file New York state return and pay New York state tax as well. And he also needs to file federal return and need to pay federal income tax. So at three level, he needs to pay. But for example, he is residing in any seven exempt state where there is no state or local tax. He needs to just pay federal tax to the IRS. So state level and local level taxes are different in every state and locality. So we do not need to focus on that, because we need to just expertise our area or the state. For the firm, if we are working in the NY state firm, then mostly there will be NY state returns. So for that firm, we will make our expertise in NY state. But our main focus would be on the federal, because all the state returns works based on federal only. So our main focus is federal return, IRS returns. So this was all about the basic structure in the US, how income tax works. So in the training, our main focus will be the federal or the IRS income tax returns. Also, we will understand how state returns works. In the software also, we will enter the state returns, everything. But because each 50 states said that different rules, different forms, so obviously we can't master all the 50 states. We need to master which state we require, or 2 to 3 states we are working mostly for. So it was about the structure. Now we will understand how tax identification number works. Like in India, we have the PAN, permanent account number, PAN, as a tax identification number. Like likewise in the US, there are different tax identification number. For individual, there are two identification number. Like based on that, return will be filed and all the tax compliance will be based on that tax identification number. So first is the social security number. It is like so we are getting PAN card. Likewise, their US citizen gets the SSN card. So SSN social security number is 9-digit number, and its format will be like 3-2-4 digit. It is for US citizen because US citizen only gets the social security number. But what if someone is not US citizen but he needs to file the tax return due to filing requirement? So if any individual who is not US individual or do not have the SSN, but he needs to file the income tax return in the US, then he needs to get the ITIN, individual tax identification number. So the taxpayer who needs to file the return or have any tax compliance, he will file form W7 to get the ITIN. SSN will be is assigned by birth only. So whenever whenever the newborn is there, their parents will apply for SSN. But whenever for tax compliance, they need to file the return and they do not have the SSN, they need to file the form W7 to get the ITIN. And ITIN format is also same as the SSN format, 3-digit, dash 2, dash 4 digit. But what if there is a business, there is no individual but business, and they need to file the business return or any other tax compliance for business? They will have the employer identification number. It's called EIN. So it is also 9-digit number. They will get by filing form SS4. So they will get this by filing form SS4 to the IRS, and its format is 2-digit dash 7 digit. So let me show you how SSN works. See, this is one form. Recipient's SSN is there because it's a very confidential information. It will not shown completely. So complete SSN will not be shown anywhere. And remember, whenever you are working, SSN is very important, or like we say, very private or the privacy matter thing that they do not disclose to anyone because they are sending to CPA. It's very easy for us to look at the SSN card, but otherwise it's not like India, like we are sending PAN or Aadhaar to anyone. In the US, they do not give the SSN to everyone. So even on the forms, it will not shown fully. And whenever you are having the SSN card or SSN information, be very careful that you are not sharing it to anyone as like there will be the data breach and everything obviously, but otherwise as an ethical thing we should not share it because it is very important as a privacy thing in the US. So SSN will be like this. Here they have masked earlier 5 digits, but otherwise the format will be like this. Likewise for EIN will be like this. For ABC LLC, EIN is this. So this is the EIN and EIN format. So everywhere, whenever there is a return, tax identification is very important, even more important than the name of the taxpayer. So it was about tax identification number. Then very basics about how tax is calculated and how it works. It's very basic. It's not in the format of the IRS, but just to understand how tax is getting calculated. So first of all, we need to understand that any taxpayer do not need to pay income tax on the all income he or it has earned. Income tax is imposed only on the taxable income. Like there is an exempt tax exempt interest. Someone has earned 10,000 of tax exempt interest. That is not taxable interest. So it will not be counted in the taxable income. Likewise, someone has received a gift. So gift income is also not taxable income. So it will not be added in the taxable income. So first there will be the taxable income total. From that there will be the tax deductible expenses. Any expenses are there which are deductible by tax, the deductible on the tax return allowed by the IRS. Then those tax deductible expenses will be minused. All the expenses are not tax deductible, like our personal expenses. If we have paid any rent or personal home rent, then it is not tax deductible. So we can't deduct all the expenses. So income and expenses are taxable or deductible as per the IRS rules. We will get the net taxable income. On this net taxable income, tax rates will be imposed and tax will be calculated. For example, 21% tax is imposed. So this is 21% is corporation income tax. It is not individual income tax rate. So for example, 21% is tax. So on the taxable income, 21% is the tax. So this is the 21% of taxable income. So tax is now 10,500. Now there is a concept of credit in the US. So in the US tax, there is a concept of credit. Credit means taxpayers' tax will be reduced by the same amount of credit. For example, here the business credit is 2000. So this 10,500 tax will be reduced by 2000 and net tax will be 8,500, not the 10,500, because he has the credit. There are different types of credit. We will understand later. But right now, just we understand the credit. So from tax, credit will reduce the net tax due and net tax amount will be 8,500. Now, what is the difference between credit and deduction? So this is the difference here. This is deduction 50,000. So deduction reduces taxable income, not the tax amount. Taxable income on which tax will be imposed. So this is tax net taxable income. So taxable income will be reduced by deductions. So deduction reduces taxable income, but credit reduces tax itself. Like here, taxable income is reduced by 50,000 and net taxable income is 50,000. On this tax is calculated, not on the gross taxable income. So deduction reduces our taxable income, but credit reduces our tax amount itself. Here taxpayer needs to pay 10,500, but credit is 2,000. So 2,000 dollar by dollar is minused from tax 10,500. So this is the difference between tax credit and tax deduction. So deduction reduces taxable income, but credit reduces tax amount or tax due. Then in the US, how tax year works? So in the US, it's compulsory 12-month period. It can't be like more than 12 month or less than 12-month tax year, except it's the first year of the business or last year of the business. So it will always be 12-month period. Tax year will be 12-month period, and it will compulsory start on the first day of any month. It can't start on the 5th or 10th or any other date. It will start on the first day of any month. Yeah, there is an exception, like business is started in the on the 5th June, then first tax year will start on the 5th June, but later on all the next all the future tax year will be from the first date of any month. So it is very clear, it will be 12-month period and starting on the first day of any month. Otherwise it's not allowed. In the India it may be allowed, but in the US it must start on the first day of any month, and it must be of the 12-month only. So there are two types of tax year. First is the calendar year. So calendar year starts on the 1st January and ends on the 31st December. It's very simple. So it's meeting all both the conditions. Like it's a 12-month and it's starting on the first day of month. So it is meeting these two criteria. Another is the fiscal year. Fiscal year means not starting on the 1st January, because if it's starting on the 1st January, then it will be the calendar year. So it's not starting on the 1st January, it is starting on the first day of remaining 11 months. From the February to December, it starts on the first day of any of these months, but it also must be of the 12 month. If it's starting on the 1st February, so it will end on the 31st January. If it is starting on the 31st June, then it will, oh sorry, if it is starting from the 1st June, then it will end on the 31st May. So likewise, it must be of the 12 month only and starting on the first day of any month. So it was about the tax year, like because we are filing tax return for tax year. For example, for individual taxpayer, we are filing mostly for the calendar year. So 2025 calendar year return will be filed in the 2026. So that's why it is very important. But some, for example, any business is following the fiscal year, like from the 1st June to 31st May. So they will file tax return for this period. That's why tax year is very important, because tax return is filed for specific tax period or tax year. Then accounting method. So mostly there will be case or accrual, is like about 11th and 12th you all have studied, so you know what is case and accrual. So I am not getting more deeper, but in the case we are recording all income and expenses on the case basis, like as in when we are receiving and as in when we are paying. Or in the accrual, we see like for what period we have income earned, whether we have received or not. But for example, on the December 25, we have received income for 2026, advance income we have received. Then we will not record it in the 2025, even if we have received it. Likewise, for expenses, we have paid anything for the like 2024, like there were previous due, but we have paid in 2025, then we will not record those accrual in the current 2025 tax year, even though it was not paid in the 24, but those expenses were deductible in the 24. So it's case and accrual, very simple. Then one term, organizer. So organizer is not the IRS thing, it's the tax practice thing. Like CPFM has their standard format to get the information. Let me check if I have organizer. Yes. So this is the one organizer. Every CPFM is the different organizer. It's like standard format. They will send blank format. They will send to each client so that they can fill up this and give back to the CPFM to get the information. So it's an easy way where they have the all the questionnaire for the current year, all the information field, basic information, income deduction. So this is the organizer. Each CPFM has their different organizer. It's not the IRS thing, but in the whenever you go in the job, you will hear this multiple times. That's why I have just explained. Then in the US, return filing is two ways. Like either we can file by the IRS e-file system or by paper file. So if we are e-filing, then it will be like e-filed by from the software itself. We do not need to send anything by paper or the email. But whenever there is a paper file, in the paper file we need to prepare the return. We need to send it through mail. In the US, mail means courier, not email. Email is different and mail is different in the US. So if we are mailing something, means we are physically sending something to IRS. So either it will be mail or fax in the paper file. Mostly it will be the e-file in the tax practice. Date format will be month, days, and year. In the India, we have days, month, and year, but in the US, you will see this date format. So don't get confused whenever there is like July 8, 2026. So it's not the 7th August, but it's the July 8th. Also in the IRS returns or any tax return, the rounding will be 0.5 or more decimal will be upper dollar and less than 0.5 decimal will be the lower dollar. Like 1.51 equal to $2 and 1.49 equals to $1 because decimal is less than 0.5. So it was very basics about the text when we are going to see the like forms or preparing the return. These are the very basic things we will see. Now we will understand what are the different types of income tax returns. Earlier we have learned what are the different types of taxes, but in the income tax, what are the different types of return or the forms we will prepare or file. So first is the form 1040. So form 1040 is basically for the individual taxpayers, any natural person or individual taxpayer. Whenever he or she has the filing requirement, they will file form 1040. So for form 1040, the filing due date is 15th April. So for example, 2025 tax year return will be filed within this due date, means 15th April 2026. So basically the due date is fourth fifth day of fourth month following the end of tax year. So fifth day of fourth month. So for individual, it's calendar year only. So it's calendar year. So for simplicity, I have written down 15th April. Otherwise, rule is like 15th day of fourth month after the end of tax year. So tax year is ending on 31st December 2025. So due date will be 15th April 2026. This due date is to file the return. Also, if there is information not ready or due to any reason they can't file the return by within due date, then taxpayer can apply for extension. So in the US, there is the concept of extension. By filing form 4868, individual gets 6 months extension to file the return. So for example, on the 15th April, taxpayer is saying that I do not have all the complete information as requested by CPA. So he or she will let CPA know that please file my extension so that I can get more 6 months. So they need to file by 15th October. Now extended date is 15th October 2026 for 2025 year return. But they do not get this extended due date to pay the taxes. Whatever the taxes they need to pay, for example, they are filing on 15th April and their tax due is 10,000. So due to any missing information, they can't file, but they know that my approx tax will be the 10,000. So they must pay the tax by 15th April as extension payment. It's called extension payment. Whenever taxpayer files form 4868 extension form, at that time they need to pay the extension payment. Whatever approx the tax due will be there, it must be paid by 15th April, not by 15th October. Extended date is just to file the return, not the pay. So they are getting more time to file the return, but they must pay by 15th April. If they are not filing within due date, like if they have extended the due date, now their final due date is 15th October. But what if they are not filing even by 15th October? So there will be the late filing penalty. So if they are filing after the due date, they need to pay the late filing penalty. What if they do not pay on the time? Means by 15th April they are not paying their tax due. Then they need to pay late payment penalty and late payment interest because they have paid taxes less late. Even though they have paid on the 15th June, still it's after 15th April they have filed extension, but they are not getting extension to pay. They are getting extension to file return. So they need to pay late payment penalty and late payment interest if they are paying taxes after 15th April. So this was the form 1040 individual needs to file. Next form is form 1065. So form 1065 is the income tax return for partnership. If there is any partnership in the US, then they need to file the form 1065. So how form 1040 will look like? Let's see here. So official IRS form 1040 will look like this. This is IRS website, irs.gov. This is the basic 1040 two pages form. Also, there will be the additional schedules and additional forms attached with this form 1040 for more calculations. But this is just single Form 1040 of 2 pages. Here there will the basic information, dependent information, then income, deductions, credit, tax, due, payment, refund, everything will be here. We will see each and every item in detail later when we'll start the Form 1040 training. It's just we are understanding types of tax return. Then Form 1065. So Form 1065 will look like this. This is the IRS official forms. It is for tax year 2025 because every year forms may change due to like some lines may change. So we need to see the tax year for which tax year this form is. Currently, it's still 31st July 2026. So right now we are preparing tax returns for tax year 2025. So this form is applicable right now. This is the form 1065 for partnership US return of partnership income. Basic information will be here: income, deductions, then tax payment if there are any. Likewise, there will be the questionnaire, then balance sheet, and all the other items. This is 6 pages form 1065. So it is for partnership. And whenever there is a partnership, they need to file the return, but they do not need to pay the taxes. How it will work? If, for example, there are two partners of 50% each, so partnership is earning 10,000 net income in the 2025. So partnership need to file the form 1065. They will file with the IRS, but they do not need to pay any tax with this 1065. What the partnership will do? Partnership will issue one statement. It's called Schedule K1 to each partner for their share of income. For example, total is the 10,000 income, net income of 1065. So each partner has the 5,000 net income from the partnership, and that 5,000 income will flow to the form 1040 here. On the individual return it will be taxable, not on the 1065. Partnership needs to file the return, but tax will be paid by each partner at their individual form 1040 level. So from by schedule K1, partnership will issue schedule K1 to each partner for their share of income and deduction. That K1 will be reported by their respective 1040, and on the 1040 the partnership income is taxable. So it is called pass-through entity. Pass-through entity means passing through all the income deduction part to each partner in their ownership ratio. For example, there are two partners, one is 60% and one is 40%. So out of 10,000, the 60% partner will get the 6,000 of income reported on his or her 1040. So it's called a pass-through entity. And for 1065, the due date is 15th day of third month following the tax year. For example, partnership tax year is 1st May to 30th April. So it is ending on the 30th April. It's a physical year, fiscal year. So if it's ending on the 30th April, so 15th day of third month following the tax year means after the ending of tax year. So tax year is ending on the 30th April. So third month is May, June, and July. So July is the third month after the tax year. So 15th day of third month. So 15th July will be the original due date of this partnership return. Now, what if partnership wants to file extension? So partnership can get extension by filing form 7004. It will also get the 6 months extension. So new date will be the after additional 6 months. Like if it's a calendar year, for example, partnership is following the calendar year. So calendar year is ending on the 31st December 2025. So their original due date will be 15th March. But if they are filing the extension, their next extended due date will be 15th September. March plus 6 months is the September. And original due date is the 15th March. Here original due date for 1040 is 15th April. Why? There is 1 month gap. Because individual gets the K1 from partnership, so they need 1 month to prepare the form 1040. So for example, by 15th March, this 1065 return is prepared. Once 1065 return is prepared, then only schedule K1 can be passed to the 1040 partner or whoever is the partner. So for example, individual is the partner in partnership, and partnership return is completed on the 15th March. Now, if here due date is also 15th March, then how on the last day individual can prepare return? So there is the 1 month gap between due dates. So by 15th March, partnership return will be prepared and Schedule K will be issued to their partners and Form 1065 will be filed with the IRS. Likewise, also 1120S is there. So 1120S return is Form 1120S is for S Corp, small corporation, and it is also pass through entity, and the due date and everything is also the same. So from S Corp, each shareholder will get the Schedule K1 for their share of income and deduction, and S Corp income will be reported on their on Form 1040 individual return. It is pass through entity. Both are the pass through entities. Form 1065, 1120S, both are pass through entity forms. 1065 is for partnership and 1120 is for 1120S is for S corporation. Let's see how 1120S looks like. This is the S corporation return, US income tax return for an S corporation. It is 5 pages form. Also, there will be the like more schedules attached with it, but the standalone separate form will look like this. Basic information here, income section, deductions, tax payment if any are there, then questionnaires, then Schedule K. So from this K, Schedule K, K1 will be prepared. Then balance it, they need to report. Likewise, other things. So this is 1120S. And then Form 1120, corporation. So for example, Amazon Incorporation, it is corporation. So they need to file the Form 1120. For corporation, the tax rate is standard 21%. For individual, tax rates are at different brackets. Like for first 10,000, it's a 10%. Then on the 10,000 to 20,000 income, it's a 20%. Likewise, there will be the slab. As income is growing, their income will be taxable at higher bracket. But for the corporation, the tax rate is not in the brackets. It's the standard tax rate of 21% for corporation. So for example, Amazon Incorporation is filing 1120. Now for 2025, Amazon Incorporation has earned $1 million. So they will file the 1120 form, and on $1 million they will pay 21% tax to the IRS. Now whenever Amazon Incorporation is distributing the dividend to its shareholders, so whenever it will distribute the dividend, it will issue Form 1099 DIV for that dividend information to its shareholder that this much of the dividend you have received. So it's information form. So whenever Amazon Incorporation will distribute the dividend, that dividend is taxable to its shareholder again in the year of receipt. So for example, in the 2026, Amazon Incorporation is distributing dividend. So this dividend is again taxable in the hands of shareholder in the tax year 2026. So here we have took the example of 2025, that in the 2025 the Amazon Incorporation has earned $1 million. So in the 2025 tax year itself, it will pay 21% to IRS. And now this $1 million is distributed as a dividend in the 2026 or any year. In the year of distribution, the shareholder will pay tax on this dividend on their 1040 or whatever the return they are filing, because partnership may also have the shareholding in the corporation. So the shareholder will pay tax on dividend again. So it's a double taxation. Once 21% is paid by corporation for the year they have earned, and again in the year of dividend, shareholder are paying on their own form tax on the dividend. So it's a double taxation entity. Like in the pass-through entity, it is taxable only one. Like partnership has earned $1 million in the current year. There are two partners of 50% each. So $500,000 each will pay, each will taxable on the 1040. And in the 2025 tax year itself, both the partners will pay the income tax on $500, $500,000. So it is only taxable once on the partner level, but for the corporation it's taxable at two level. At one is corporation and one is a shareholder level. So it's a double taxation entity, and due date is 15th day of a fourth month after the end of tax year. For calendar year it will be 15th April, because fourth month is the April. And it will also get the extension of 6 months by filing form 7004. So for businesses, extension form is 7004. For individual, extension form is form 4868. So this was about main income tax returns you will see. Main four types of income tax return you will see. Also, there are two another income tax returns. One is the 1041. So 1041 is basically for trust and estates. So for example, any trust who like any family has created trust. Now the trust has the property or investment. For example, trust has the rental property. Now trust is receiving the rental income, so it need to file the form 1040 trust income tax return, because trust is having the filing requirement. There are filing requirement. Trust has the income, so trust need to file form 1041. For example, trust has the investment in any stock market. Now trust is receiving dividend or capital gain or something, so trust has the income, so it need to file the income tax return. So form 1041 need to file. Likewise, estate is like whenever someone has died and there is like a transfer of property under the inheritance. So at that time, estate is holding the property for 1 year or 2 year until the process is completed. So if estate is receiving income during that period, holding period, the estate is also needs to file income tax return for that period. And it is a partially pass through, not completely pass through. Form 1065 and 1120s are completely pass through entity, but 1041 is the partially pass through entity. Partially means some of the taxes will be paid by 1041 estate or trust, and some of the taxes will paid by their beneficiary. So there are like very deep and different rules that how much income will be taxable on the form 1041 and how much will be passed through to beneficiary. It is based on the distribution amount. So whatever the income taxable to the beneficiary will pass through to the beneficiary. So beneficiary will pay tax on that taxable amount received from 1041 on the form 1040. So beneficiary's income tax return will have the income passed through from the estate or trust, but it is not all the income. It is based on the distribution. So remaining part which is not taxable on the beneficiary's return is taxable on the form 1041 itself. Means trust or estate will pay tax on that remaining part of the income. We will see it later when we will understand the form 1041, but it is not that common in like a regular practice. Also there is the form 990. It is one of the lengthiest form. So form 990 is for tax exempt organization. Like any charitable organizations are there, they do not need to pay taxes on their income because they are doing the charity work or any social purpose, but they need to file the return. Even though they do not need to pay the taxes, but they need to file the return to disclose all the information, what donations and everything they are getting. So whatever the tax exempt organization is there, it may be the government organization. So so whatever the tax or exempt organization is there, based on the filing requirement, they need to file the form 990. It is income tax return, but it is for tax exempt organization. So these are the six types of income tax returns. Mostly we need to work on this. Yes, there are the like expertise. If someone is expertise in 1041, then big CPA firms are specific their domain for 1041, like where someone is working on just on 1041, but is the niche area. So main are these areas. Then there are two wealth tax return. Like here we understood what is wealth tax. So it is imposed when there is a transfer of wealth. So there are two wealth tax returns. It is not, these two are not income tax return, but normally we do prepare in the tax practice. That's why I'm just explaining. So whenever someone is gifting any property to another person, the transferor means whoever is giving the gift needs to pay gift tax. So gift tax is imposed only when there is a transfer of property under the gift. So there are the rules like up to this amount gift is not taxable, and to this person this relation gift are not taxable. We are not going into that, but it is applicable only in the year whenever there is a transfer of wealth under the gift. At that time the transferor need to file the 709 and pay the gift tax. Likewise estate tax. So gift is given by someone who is the living person, who is alive. But for example, anyone has the 10 million of property, but he has died. Now his all the property will be transferred to their next generation under the inheritance. So to their child or another descendants. So now whenever there is the transfer under estate, it's called estate because someone has died and now there is a transfer, so it's not the gift. So whenever there is the transfer under estate, still estate tax will be applicable. It's not income tax, it's estate tax and applicable on the year of transfer of property under estate. At that time, they need to file the 706 and pay the estate tax. Here, a trust and estate income tax return is different from these two because this is filed when trust or estate has the income received from property held by them. If there is the income, and then they only need to file 1041 and tax is imposed on the income earned by estate or trust. But here these two are the applicable on the transfer of property. So for example, someone has gifted property, so at that time only this tax is applicable, but this is applicable when there is income earned by estate or trust, and this is income tax return. These are wealth tax returns. So this was about that those parts, and now let's understand little how legal and tax structure works in the US. So there are different two things, and make very clear from very start that legal and tax structure are different, not the same. For example, if you want to start the business in the US, you need to register your business in the state. Unlike India, because in India we will register our business with the MCA, whether as a LLC or sorry, whether as a LLP, private limited or limited company, we are registering with the MCA, Ministry of Corporate Affairs in the India. But in the US, all the business registration works at the state level. So you need to register with the state you want to work. Like for example, you want to start the business in the California, so you will register it with the California authority. Like MCA, California has their own business registration authority. For example, California has income tax authority called FBA. Or likewise, New York has their own income tax authority. Likewise, they have their own business registration authority. So Secretary of State SOS manages this business registration. So if we want to start the business in the California, we need to register our LLC or INC, whatever we want to register as a, we need to register with the SOS of the California, Secretary of State of the California, for example, here. California Secretary of State. Here we need to register our LLC. Business registration do not work at the federal or central level in the US. So FTB is their income tax authority. Sorry, it is FTB, Franchise Tax Board. This is income tax authority. So if we need to file any income tax return, then it will be filed with the FTB. So whenever we are registering our business, it will be registered as a LLC, INC, or LLP, or it will be in unincorporated. Like we are working at a very small level. For example, we are running one shop which is not registered as LLP or LLC. It is our sole proprietor shop. We haven't registered anywhere. It is okay. So it is unincorporated. But if we want to register with the state, it can be registered as a LLC. It can be registered as an incorporation, INC, or it can be registered as a LLP. So this incorporation we say it corporation. It registered as a INC. It's a corporation. and either we can register as a LLP, limited liability partnership. LLC is limited liability company. So different state has the different rules of like business registration, income tax, everything. So this is the legal structure. Legal means from the legal compliance point of view, business registration point of view. But from the tax point of view, it is not like this. From tax point of view, you will see this. It's 1120S, it's 1065, it's 1120. This is the tax structure. This is the legal structure. We are registering or running business. This is the tax structure. So we are not filing the LLC return. We are filing 1120S, 1065. So this is the difference between tax structure and legal structure. So don't be confused with the legal structure and tax structure, because LLC can file return as 1120S, it can file return as 1065, LLC can file return as 1128 to 1120. It depends on the situation and their meeting criteria, whether they are meeting criteria for particular type of return or not. So don't be confused with the legal structure and tax structure, both are different. Like INC can file return as 1120S or 1120. So it is not INC return. It can be 1120 return or 1120S. So we need to think from the tax perspective. Legal structure is different. We will understand like which legal structure can file different type of which type of return. That everything we will understand in the deep. But just before the beginning, I want to make clear that this both the structure are different. And if there are any foreign entity, they have the different rules. If there is any foreign individual, they have the different forms. But so it's like 10:58. So we have just 2 minutes. So I want to explain you briefly about the form 1040. So form 1040 is filed by in US individual tax return. We have seen here how 1040 looks like. So basic rule is if someone is the citizen of US, whether he has income from US or any other country, he needs to file form 1040. There are filing requirement, like if you have income above this level, then only you need to file. It's not compulsory to file every year. If you don't have the income enough for the filing requirement, you do not need to file the return. But if filing requirement is there and someone is the citizen of US, he or she needs to file form 1040. If someone is the resident of US, he needs to file form 1040. And if someone is the green card holder, then also he needs to file form 1040. On the form 1040, whole worldwide income is taxable. Even if you are earning from any other country like India or any other country, all the income are taxable on the form 1040 in the US. All the income, all countries' income are taxable on the form 1040. So citizen and green card you can easily understand, but what is the resident? For residency, there is the rule of 183 days. So any taxpayer is 183 days or more resident of the US, then he needs to file the form 1040. How 183 days are calculated? So to calculate 183 days, IRS calculates current 100% of the current year, like current tax year. For example, for 2025, 100% days of the 2025 residents, they will calculate 1/3 day of 2024 means previous year, and 1/6 day of second previous year means 2023. They will make total of these three, and if it is 183 days or more, then they will consider as a resident, and that taxpayer need to file form 1044 tax year 2025. This is not that important from like to mug up right now, because whenever you will start working on the returns, you will get this practically. So it is not no need to mug up, but just to clarify how the residency is calculated. Also, there is the minimum 31 days in the current year requirement. Like in the 2025 tax year must be 31 days, then we will see if total of all these are 183 days. For example, due to previous 2 years 183 days are meeting, but in the current year taxpayer was only 25 days in the US, then still he is non-resident. So whenever he is non-resident not meeting 183 days condition, then they need to file form 1040 NR, not form 1040. If someone is non-resident, for example, you are US citizen, you are Indian citizen, you are working in the US for part time, or you went on the like business trip for some days and you have the business income which are taxable in the US. So you have the US source income, you need to file the tax return in the US, but you are not the resident citizen or green card holder of US, then you need to file form 1040 NR. 1040 NR is for non-resident individual. And on the 1040 NR, just US source income is taxable, not worldwide. On the 1040, worldwide income is taxable, but on 1040 NR, only US source income is taxable. For example, you have the Indian income as well as US income, but you are filing 1040 NR, then only US income is taxable. So this was about like very basic of 1040, how it works. Then the May 1040 starts with the filing status, but time is already over, so we are not going ahead. And it's about this first session. So before, like, this was the first session and we are starting now the practical 1040. So before this, I just want to let you know that in the practical job, whenever you are going in the on the office and working on the tax return, it is not important that you know more info, you have more information. It is more important that you have the more conceptual clarity or you have the research skill. Even if you do not have, for example, you do not have idea about the filing status, but you have the ability to research, make the research about the filing status and take the decision. That is very important. So it is not required to mug up everything, but to understand concept and getting the conceptual clarity. Even if you are doing the EA, which is enrolled agent tax qualification in the US, like we have CA, chartered accountancy in the India. Likewise, there is an EA for tax professional. I am also an EA. So in EA also they have MCQ only, but they are checking the very practical knowledge, not the like, it is not like we need to mug up everything and the person who is passing has the more information or remembering more. It is like more like conceptual clarity. So remember, in the US industry you are working, whether it's accounting, audit or tax, here you need to be more practical and more have the more practical knowledge than the books knowledge. Like even in the CPA they are like giving the open books for the all the practical sums and everything. So in the US no one will ask you the attempt, like in the India they're asking in which attempt you become the CA. So US is very different, or any western country, they are very different. They are focusing mostly on the practical things. Even there is the like less importance of the qualification over the experience. If you have the 10 years of experience, but and you have the good knowledge but you do not have the qualification, then you will be like have the edge over someone has the qualification but less knowledge. So your experience, your actual knowledge is very important in this field. So in all the sessions focus on the like whether you are getting conceptual clarity or not. And my teaching method is also on the same part. Like I am opening the software and practical form and our content together. Like whatever I am teaching here, I will enter that in the practical text software it is also. So it is not like I will just explain you from this content or the file. We will prepare written altogether. Like here there is a filing status concept is there. I will open the form 1040. There I will select the filing status we need to select. Likewise, if we are understanding the wages income, so I will enter the wages income in the ProConnect or Drag software we are using. So likewise, we will understand here altogether, we will prepare the written in the software so that you have the software idea as well. Because in the job, whenever you will write on the your resume that I have the training of the Drake or ProConnect, then it will be edge for you over the others. So we will go very practical. It was very basics, so I haven't opened the software. So I would like to like take your opinion whether you want to work on the ProConnect or Drake in the training. Because I am using the ProConnect because it is a web based and it is easy to use. There are multiple softwares and you can understand it like within a week or 2 weeks. So it is not like required that you know every software, but you have the method to know every software. So normally I prefer the ProConnect, but if there is any preference from your side, then just type the software name that you want to go with this, and we will go with the majority. We will get the majority name of the software. So if you have any preference that I want to get the training on this software only, then just type. Otherwise, we will go with the ProConnect. It's web-based, so it is easy to use and easy to log in for everyone. Otherwise, for track, you need installation and maybe like installation permission, everything. So let me know if there is any preference. Otherwise, we can conclude this session. Yes, Manish, I can't hear you, but you can type.
Hello, Ishan. Can you hear me?
Yeah, so materials like I will provide this my seat access as well, and also I will provide the like there is a claim material for EA if you want to refer all those. Otherwise, for material we have the IRS sources and everything. So don't worry about material. We have the enough to get the idea. Otherwise, all the claim material I have. Yes, for job, if you need material for preparation, this practical sheet is enough. Yes, business written training will also be there. All the types of business written we will cover. Whatever types here we have covered, I will cover. These four types of returns we will cover in very depth. 1041 and 990 also we will cover briefly. Yes, for interview cracking, like I will provide the guidance like how you can prepare, and also we will provide you the job job placement assistance uh, where the CPA firms are hiring and everything. No, age constraints is not there. Like I have seen, like in my job career, I have seen many people joining this domain even after like 35, 40 or 45 years of age. So it is not age constant at all. Yes, like career gap opportunity, if you are having the like basic knowledge of the US tax and you have the like any accounting graduation or anything, you can get job easily. Yes. You can ask all the question here in the like chat. Yes, Vikram.
Hi, Vishan. Vikram this side.
Actually, like I can't hear you, but you can type here in the message. So daily there will be 1 hour session. If like everyone is comfortable, we may change the duration. We can increase, but normally it will be 1 hour. So admin will like decide timing and they will I believe they will take the opinions from everyone that what timings are preferable and everything. So it will be like done by the admins. Uh, the long I'm expecting it would be 50 hours, maybe it go 5 to 10 hours more, but average it took 50 hours. Yeah, welcome. Yes, sorry, Sarath, what experience? Yeah, if you mean like you have another experience, another field experience, then obviously. Yeah, obviously, indeed, I have seen many Indian accounting and tax professional joining this US tax. So, like, I have seen hundreds of such professionals who are working in the different field, but they are getting in this like Indian tax or banking or yes, obviously. Even I have completed my CA inter, so obviously you can join. Yes, all the types of business return as well as individual returns will be like training of those all those business and individual return will be provided in the are all the session live. It will be live software training as well as the like their rules training. So both will go together. Like here I am explaining rules that will also be like entered in the software how it applies in the software. So yeah, it is for individual as well as all the three types of business return. No, it depends. If you have like some basic work experience in the tax, then you can show more experience. But if you do not have any experience, then they will like catch you in the interview itself. So it depends on the situation. I have seen like someone has the 6 months experience, but he has EA and good knowledge, so he's showing 1.5 years instead of 6 months. So that we can do, but practically they will catch in the interview. But yes, if you have audit experience, you have the EA, then you have the edge over freshers, and the salary structure will be different. It will be not like for freshers, it will be higher because you have another field experience and also EA. So it will be like good difference between fresher salary and your salary. No, KPOs working in the night shift, that is not pure night shift, 3 to 12 or something. But there are like few or some firms working in the night shift. But now, like most of the jobs are either day shift or like very less night hours you need to do. Like in the my first job for 9 months, I was working 3 to 12, and that was too flexible. But then I have worked for 5 years in the day shift only, so it is not required. Like even currently I'm working directly with the US CPFM as a like independent advisor, so they are working in their own shift, but whenever we have the meeting or something, we adjust the time. Otherwise I am working in my own time, so it is not required that it will be night shift only. And in the CPFMs it's always the day shift in the India, but whenever there is a KPO firm, there may be the chances they have, but that will be not whole night. And it is like it will be in the your initial 1 or 2 years, then you can easily find the pure day shift. See, currently also there are like freshers jobs. Like if you have very basic idea or you are the commerce graduate or any such thing, right now there are also the fresher job, but there they are asking for CA inter or CA or so. But if you have the training, then it will be very easy for you to find. Like once you join, we may have the one group, WhatsApp group, where I can post the job where they are hiring for the freshers. And also like I have the very good connection in the industry, so I can refer you for the like freshers job or the with the practical training experience they can hire. Like I already referred many candidates from last 3 years, 4 years, even out of the state I am residing. like with my connection, like, and I was referring, and they were easily getting the freshers job. So it is not that freshers are not getting hired even without experience. There are the freshers opportunities, but if you have this training, it will be very easy to crack the interview, and you have the edge over other freshers, because there are lots of pressure. But if you once you mention on the resume that you have the practical training, and this is very practical training, it's not like we are just giving you the theory knowledge that this is the US tax. Whatever I have worked over the 5 6 years, we have worked, like I have the experience with the multiple CPA firms on the tax planning, as well as big firms I have worked on. Like currently it the firm I was working is under the top 25 or top 30. So all the things we have practically worked, I am providing in the training, so that you have edge also once you start the job. Because some fresher are starting the job, then it will be very difficult for 1 year or so, but for you it's like you are already experienced. So it is not just theoretical training. It will be very practical what we are doing. Like even I have all the documents practically we are using, like what taxpayer document we are receiving, all those I will provide you, or the share on the screen, and I will enter in the tax software, like this document will received by from the tax software, and we will input this in the software like this. So it is very very practical, not like just for the theory. We are having the all the practical documents from the our clients. I have just masked the whatever the personal information is there, and from that only we will get the training and the prepare text preparation in the software. Sarath, like it is like completely based on your interview and how you managing it. Like I have seen someone is giving PwC interview without experience, so it is up to you. But if I am like taking interview, then I know that if someone is completely fresher, then I can catch. But if you have other experience, or you have the you have other domain experience, or you have any good EA or any license, then you have the edge over others, and salary will be the different. It will not be same as the fresher. Yes, any other questions? For freshers, starting range of salary, so it depends on the firm you are joining. In the last season, like January season, there were the candidates took the training and joined. They were like on the first 3 to 4 months on the as a internship. So internship stipend was 25,000. Now they are at 5.5 to 6.5 package after 4 months. So it completely depends on in which company you are joining. But very basic salary is 25 30,000 per month from the your starting. If you are doing good, increments are very good as compared to other industries. Like one of my friend joined at just 15,000 of stipend for internship for first 3 months. He is currently at 1 lakh of package, even if like it's just 2.5 or 2.8 years. It's he haven't completed even 3 years. He is at 12 LPA package. He started with the 15th or 20,000. So increment are very good, but it's based on the how your knowledge is there and how you are performing. So starting salaries, we can say 30,000 is currently working. Most of the companies are giving 30,000 to very freshers. If you are like have worked on other field, then it may be the higher. One of my friend who had the articleship experience, he started with the 40,000, even he was a fresher in the US tax. Yes, sir. Obviously, like I have seen such cases, like they are getting job even without EA. So EA is it is not. As I said, it is not like India that qualification is that much important. In the starting of the career, your experience is important. Like as a fresher, how you are thinking, they will even not ask about the US tax questions if you are completely fresher. If you are telling that you have the training, tax training, then you have the edge over others, and they will like ask whatever you say that these topics I have covered in the training. Then from that they will ask, and mainly they will catch on your how you are thinking, your thinking process and everything. So as a fresher without EA, obviously I joined my first job as a without EA only. After like 1.5 2 years, I became the EA. And in the US, the structure is like EA or CPA is not for the freshers. It is the professional qualification. So once you start your professional journey, then with the job, it should be done. Not as a fresher, you should do the EA. And even if you are fresher EA, I know many fresher EA, they're not getting the jobs. I know many, not just few. I know many ES not getting the jobs because they are fresher. They have the EA license, still they are not getting. But I know many who don't have the EA, but they have the good knowledge, then easily they are getting. So I never suggest that you should do the EA before your job. So after experience, you can get the freelancing job. Like I am doing my own work independently. I'm not working with any company right now. I'm direct working with the CPA firms in the US. So yes, you can get freelance work easily. But after the experience, how your network is there, how your like skills are there, and you can get it. Yes. Yes. So please let me know if there are any other questions, or we can conclude. Yeah, anytime. You are welcome. See, after job support, like I provide informally as a like friend or as a friend or any connection. Like I from my previous trainings as well, I do provide support to the candidates, but it's based on the like how my availability is there and everything. But yes, as I said, I'm teaching for my passion, and also I like to support others to like let others grow. So yes, I will try, but it is not the part of the training. It is not commitment, but on the personal level, I like try to help others. Like there are candidates have the good experience 1 or 2 years, still like they come up with me for any like practical work issue they have, still I try to like help them, but it is just on the personal level. No, offline classes for me it's not available. You may check with the like admin if like there are available, but mine classes will be online only. Yes, it's online only because candidates are from the different locations. So for like this domain, we have the online classes only. No, tax will be taught by me only. I will cover all the tax returns. So all the 50 sessions will be taken by me. No. You do not mug up or remember everything. As in when like we will go ahead, you will easily remember the things required to remember. When you go in the job, you automatically remember whatever the important things are. So I never mug up anything. So whatever the important things you can easily remember. For interview, whatever the important is there, you maybe remember, you need to remember. But I believe in the training, like it's new to you, so maybe you need to try to remember whatever the important things are. Those only you need to remember. But most of the things are such that once you took the training, you are like you have your in your mind automatically. So it is not like bookish thing or something. So everyone, can you confirm, like if you do not have question, just put no in the chat so that I can have the idea. If you have any question, you can yes ask. For interview, I will like provide assistance in detail, like what you need to remember and everything. But in the even in interview, they will not focus on your like memory. Mostly interviewer are like checking your thinking process and the conceptual clarity. Yeah, Vikram, welcome. Yeah, so I think no one has questions now. We can conclude the session. But if you have any questions, you can ask Kiran to like create a group, WhatsApp group where I can like assist you if you have any questions. And thank you everyone. Bye. Goodbye.